item, other revenue, covers user fees across the business, and our budget this year is 58 million. We believe that was too ambitious based on what we're experiencing to date, and we are forecasting that to be lower by about 4 million. So we did kind of give you a brief summary in the inductions on user fees. So big user fees comes from building services, airport, and then sort of parking, I think, are our big ones. And then a range across the business. Where's Robin? If you just flick to 2 pages down, you'll see a very ugly and detailed report in orange, and that is a breakdown by activity of where all the revenue and the variances are coming from, and we also break down the expenditure associated with those same activities, so it's on the same line. At the moment, it's not particularly exciting to read. As the year goes by, and you might start to see more significant variances. We don't normally talk to this report, it's for information, and we summarise the main variances on that front page. But I just thought, for your information, if you want to kind of understand where the revenue's coming from, that's the report. Okay, so at this stage, we're saying mainly building services, revenue will be lower because the building consent volumes are lower than was budgeted, and forestry income in our water activity, we have been harvesting trees in the Oropi water catchment, and that's been put on hold, so that revenue won't come in, and neither will the expenditure associated with that revenue. And then finance revenue, the next line down in the operating revenue, is short-term investments and the interest rate income on those. So it's not a big part of our business, and it's normally, a lot of it is from rates which are collected in bulk numbers in August and February, and then some of that money is invested for a time till we have to spend it. Right, so so sort of flowing down the page, the next lot of revenue is what we call asset development revenue and other gains. So that's cash, can be cash, or it can be assets received into the business that are related to assets. They're not related to funding operations. So development contributions is the money we receive at time of subdivision from what do you call them? Development. From the developers, and then at the time of building consent. So the citywide and local development contributions. Other gains and losses at this stage of the year, it's mainly an accounting entry, that one, related to actually the HIF loan budgets, but I won't go into that. The next big one, subsidies and grants for capital expenditure contributions. This is 26 million budgeted for the year. We expect to get just slightly behind that, and it's basically NZTA funding for our large capital program. And the last one, vested assets at 50 million. That's just physically the assets that developers vest to us, and that 50 million is based on receiving some large assets around Wairaki and Haerini this year, so haven't received them to date. And then if we flow down, personnel expenses, which is staff costs and related training, budget of 63 million at this stage, we expect to be on budget. Depreciation expense, we expect to be favourable to budget, and that's because the budgets, that's associated with our asset base and the value of our assets and the proportion of that is depreciated in a year. It varies by the capital program as we build new assets and put them on, and it also varies by our revaluation, and our revaluation resulted in significant assets having their life extended, and therefore the depreciation went down. So that's that benefit. Finance expense is the cost of borrowing mainly for our capital program. We separate out consultants and contractors brought into the business, and other expenses, very big block amount, covers the big contracts we have for repairs and maintenance and operations, as well as the rest of our day-to-day business. So did anyone have questions about that at this stage?
Thank you, Catherine. The councillors, any questions at all from anyone on Catherine's report?
That's just on the financial.
That's just that first step, but then we were going to...
Yep.
Sorry, we're dragging you through these, but it
That's
hopefully
okay.
will help you in future. So the next report, earlier in the previous sitting of the Finance and Risk Committee, Mohan talked about the Treasury Strategy, so I wasn't going to go through this in any detail. It does talk about our expected debt at year end, which remains at the level that we budgeted at about 540 million. And on the right hand side at the bottom is a little box which talks about our financial limits. So these are set through the long-term plan process. Our absolute limit is 250%. This year we're forecasting 201, and that's the ratio and the limit that actually will come under stress in the next few years. So you'll hear quite a bit about that ratio over time. The other two are also part of our borrowing limits, but we are well within range, so they don't tend to be a driver of our strategy. So that's the net interest to operating revenue and net interest expense to rates. Okay, so I'll hand across to Tracy to talk about the capital report.
Good afternoon. Just to summarise this report, on pages 263 and 264 of your agenda, the total capital program for the current year is $204 million. That's net of a deliverability adjustment of $60 million. So we have recorded $264 million worth of projects. We've spent $35 million to the end of October, which at 17% and a third of the way through the year sounds really light. But the reality is that a slow start to the year is fairly normal. The report itself, the information is arranged into significant programs or groups, mainly for easier digestion. There is, as you can imagine, a very large number of individual projects. It focuses mainly on financials. There is an overview commentary given, which is largely provided by the project managers, and which at this stage, for some of those programs, has possibly been superseded by events. Further information on those projects and programs will normally be presented to you via the PSOC committee, which I believe you had this morning in any case. Excuse me. In terms of the columns, we itemise the year-to-date spend, the full-year budget, our current forecast, and the column with all the lovely colours in it is the total current and future project budget. And the reason we include that is because it gives you an idea of both the scale of the program and the commitment going forward. So you'll see there's some very substantial numbers in there. For instance, 188 million for Te Maunga. The colours in terms of risk assessment for cost, I'll just let you know that those colours are essentially an aggregation. So where there's a program, there could be 5, 10, 20 individual projects in there, and if one of them is at risk in terms of its financial deliverability, then the whole program will show as at risk. Turning on to page 264, you'll see there's a small item, at the bottom, relating to land sales summary. We include that because land sales income effectively offsets our capital expenditure. We don't have a large budget in the current year for land sales, but it's there for your information. I'm happy to attempt to answer any questions you may have.
And tremendous, thank you very much. Councillors, any questions?
And just the last page is the capital project variations to budget. So we have a delegations policy where there's an overspend on a project above 500,000, then it needs to come back to council. So this table presents any of those areas of expenditure that are going over budget that have already been to council, and that's in the bottom half actually. That's at the moment we only have the Tamunga wastewater treatment plant upgrade overspend, which was approved in August. And in the top part, we outline for you areas we've overspent to budget that have received Chief Executive approval to do so, and the reasons on the right. And again, a lot of those overspends at this stage of the year are projects that have flowed through from last year, where the overspends were approved.
Good afternoon. I'm Josh Logan, Team Leader of Corporate Planning. Take you quickly through the non-financial info. So what they are, how we're sort of tracking, and some proposed amendments, and then just a last little bit about the annual resident survey. So the non-financial, the set in the LTP, so the levels of service are set, and then the measures of those levels of service and targets are what we report on. We report quarterly to FARC, and this is the first report for this one, and but to give you the most up-to-date info, we've also included some of October's numbers in, and we've identified that throughout the report. We're tracking about where we usually track at this point of the year, so we're at about 62% on track, and then there was 7% off track, and then there's still 46 measures where data's not available, so it's dependent on the timing throughout the year as to when we get those results. Sometimes it's at the end of the year in June, and other times it can be in December, so we just include those as they become available. There was some proposed amendments by the Waste Behaviour Change Programs team. They'd done a review after 12 months of the LTP being in place, and they've identified some amendments where they would like to increase the target, and also they'd like to add a couple of measures in as well, noting that there's no proposed changes to the level of service. They're just wanting a better way of measuring that. We did do this last year, if you recall, in February. We came to you at the same committee and proposed 4 amendments, which you adopted, and then so this was seen as an appropriate way to make minor changes throughout the times of the LTP, and Audit were happy with that at the annual reporting time. And then lastly, some of the work that we do is the annual resident survey, and along with Key Research, who are running that for us. So currently we do it in 3 waves. Wave 1 is currently out at the moment. We should be getting results at the end of December for the first wave, and we'll report those back to you in the Q2 report. Happy to take any questions.
Tremendous. Catherine, Tracy and Josh, thank you very much for that. Councillors, any questions of the team? Nothing at all. Councillor Cloud.
Thank you. The Marine Precinct, the number of lifts, this is on page 301 of our agenda. So the number of lifts has been 9, and I'm assuming that's July, August, September, so it's 3 months plus possibly some October in there, is that right?
If it was October, it would have an asterisk next to the number.
Okay, so there's 3 months.
Probably 3
So
months.
clearly we're a quarter of the way through the year, but only 9. So we're clearly going to be underperforming in terms of the number of lifts. How do we get feedback directly from the manager of the precinct or the operator? I mean, how do we as a collective delve more into that?
As you might be aware, Paul's currently working through a process with Marine Precinct about how we move forward with that, so I can get Paul to provide an update probably through council catch-up in the first instance, and then a more full update back to probably PSOC.
Thanks, Councillor Cloud. Anyone else? All right, so we have 2 recommendations to look at here, that the Finance and Audit and Risk Committee receives the report, financial and non-financial monitoring. The period ended 31 October 2019, and that we agree to amend the non-financial performance indicators as proposed in attachment 4 to that report. Thank you, Councillor Cloud. Can I get a seconder, please, for that? Thank you, Councillor Salisbury. All those in favour? Against? Carried. Any abstentions? I beg your pardon, before I say carried, are there any abstentions? Carried. I declare the motion carried. Thank you very much to the team who have left very quickly. Now, we completed 7.3, which was a Treasury report at the previous FARC, which leads us on to, if I'm correct, 7.4, which is the first quarter Lagoimas, period 1 July 2019 to 30 September 2019. Is that correct? Tremendous. Susan, thank you.
Thank you, Mayor Powell. So this report is a quarterly report to give you a snapshot of the type of Local Information Act requests that we're receiving and some trends that we're observing with those requests. In addition, some information about the Ombudsman audit that I referred to this morning. So again, I'll take it as read. It's a snapshot. There's no decision required. It's for your information, but happy to take questions.
Thank you, Susan. Councillors, any questions of Susan? Going once, twice, gone. I'll put the motion. Put it to the motion. Sorry, I beg your pardon. The recommendation is that we receive the first quarter report, Lagoimas 1 July 2019 to 30 September 2019. All those in favour? Those against? Sorry, John, you've seconded it. Yes, I'm happy to do that. No abstentions. Thank you. That's motion's carried. We're on to 7.5. Is Ray with us?
Through your worship.
Barbara, thank you.
Through your worship, firstly, Ray's apologies. He was committed this afternoon. I'd like to take the opportunity to acknowledge the amount of work that the team... Sorry. that the team did to leading up to this audit and what a fantastic result it is. It's important to note the duration of the audit. A normal audit is 4 to 5 days with just INs on site. This was double that length of time with both INs and MB. And so from that, we got an extremely good outcome. There's no serious non-conformances, 26 general non-conformances, and more importantly, their team aren't doing a follow-up audit. 26 general non-conformances may sound a lot, but when you look at the size business we have, in comparison to other councils, it is a good outcome. And more importantly, certainly the inspection teams had no findings at all. The team are working hard on clearing those general non-compliances, and we're quite confident that we will have them cleared in time, which is mid-January for submission to the INs team. So very happy to take questions.
Thank you very much, Barbara. Councillor Cloud.
Thank you, Barbara. I've got 2 questions. Well, first of all, it's fantastic that you've pulled the department together very quickly and made some good improvements there. Page 353, the Regulation 8, down the bottom there. So it talks there about, it was not a non-compliance, so that's good. But I'm just surprised that because we're told that often we get, we're behind and we don't have enough staff to process these consents at times, and yet we're saying here that we don't have a problem. So can you explain? It just seems a bit incongruous.
What's required when you go through the audit is to actually make an assessment of the staff that you need for the number of consents that you get. And so we've made that assessment, and we have the budget, and we have the people, we have the roles that would mean that we've got enough staff. Unfortunately, at the moment, we can't fill those roles, and we are relying on consultants to do that. So as far as having the resources available for the BCA to actually deliver, we are okay. We just can't fill the roles, which seems a bit silly.
Yeah, okay, it didn't seem to quite make sense. But okay, thank you. And then my other question is on page 378. And there's about halfway down the page, it talks about a note, and it's talking about the backlog of 1,318 CCCs. Do you want to just give us a quick background as to why we've got that issue and what we're doing about it?
That was last year, 2 years ago, when we were audited, we only had 700, I think it was in 94, of historic consent. So that the situation there is when a person doesn't apply for a CCC, we need to follow up to ensure that happens. So we were actually working on clearing CCCs that were further back, that were more historic. And so what was discovered through the audit, that we only needed to go back those 2 years. So we'd spent 2 years working on clearing CCCs that were 5 years old, had been in the system for 5 years. So we've actually increased from their perspective, although reduced in the overall total number of historic CCCs. So we have to have those 1,300, I think it was a 94, cleared by the middle of January. I think at last count, which I checked last week, we're down to about 40.
So were they all re-inspected and signed off, or were they, a lot of them were just no longer required and dropped off the system? How does that work?
Well, the more historic ones, there is an assessment needs to be made. The ones that were within that 2 year period, I'm not aware of any that were declined. The majority of them would have been inspected, or they may not have been inspected yet. They will be scheduled to be inspected over the next few months. So I'm not aware that any have been declined, but they will require follow-up final inspections.
Kelvin, does that satisfy your...
Yeah. I'm just surprised that you've gone from 1,300 down to 40. It just seems almost too good to be true.
Well, the point is making the decision. So we've gone through those and we've made the decision and we've sent the letters to people. They're not all closed off, I guess, from the customer's perspective and the issue of a CCC, but the decision's been made, and where appropriate, inspections or we're following up with people to actually sign off on that CCC.
Any other questions, councillors? Barbara, I'd just like to reinforce what Kelvin said. It has been a remarkable shift, and so you may have seen to such a degree that on social media there is some surprise, to say the least, at that shift and the accreditation. So I'd just like to congratulate you as well on what has been a hole, if you will, and a very public one in the performance of the council, and you've done a stunning job.
Well, thank you very much. I'll certainly pass that on to the team. They'll be pleased to hear that.
Thank you, that would be great. So the recommendation is that we receive the IANZ Audit 2019 report. May I have a mover for that, please? Councillor Salisbury, and a seconder. Councillor Hughes, thank you very much. All those in favour? And against? The motion is carried. So I just need to turn the page the right way. That is the end of the open session. So may I have a mover to go into Larry, thank you very much, and Yako, thank you as a seconder. They're not on.